Around this time each year, many consulting firm owners stress, struggle, and scramble to get their books in order for the upcoming tax season. This stressful state, combined with the goal of ending the year strong, can be very overwhelming. Several tax mistakes occur when consulting firm owners are operating under stress, plus, their books are a mess. During this episode, I will provide you with 5 costly mistakes draining consulting firms' accounts and how to prevent them or correct them immediately. Stay tuned. Welcome to Say Yes to Profits. Here at Say Yes to Profits, we help consultants build $1 million firms while tripling their cash flow and profits without stress, struggle, or burnout. Now, our goal is to make you smile when you log into your bank account because you have more money, more profits, and you're paying less taxes. So subscribe, follow, and listen up. And as a result, we will make it rain money in your business. Now join me on the path to say yes to profits. Greetings, everyone. I am 𝐦𝐨𝐬𝐤𝐞, your virtual CFO and the CEO of Say Yes to Profits. Before we jump into this episode, go ahead right now and click the subscribe and follow button. Click it. Click it. Did you click it? Yes. Also, follow me on Instagram at 𝐦𝐨𝐴ViaConnor_. That's Connor with an ER, 𝐦𝐨ViaConnor_. Now, this episode is brought to you by the Tax Ready Bookkeeping Special. The special is only for 10 consulting firm owners that want to eliminate the tax filing stress, position their firm for profitability, become fiscally responsible, and be in compliance with the IRS for this upcoming tax season. For more information, visit sytpnow.com/TRB. Now, I have a question for you to kick off this episode. Do you want to pay the IRS more money in taxes? Now, I'm pretty sure you're like, absolutely not, Octavia. What was the purpose of you asking that question? I'm asking that question because, unfortunately, many consulting firm owners do. They pay the IRS more money because they are making costly mistakes that are draining their bank account, costly mistakes that can be avoided. So let's go ahead and jump into the 5 costly mistakes that you need to correct or prevent in your firm right now. Mistake number 1, not gathering all your yearly source documents. Listen, the IRS requires all business owners to keep receipts and source documents of all purchases that are $75 or more. By doing this, not only are you in compliance with the IRS, but you are proving that the purchase is tax deductible. And let me be perfectly clear here. Your bank and credit card statements are not proof, okay? Let me say that again. Your bank and credit card statements are not proof. I cannot tell you how many times I hear, oh, I have my credit card statement, so I'm good to go. I hate to break it to you again, but no, you are not. A bank or credit card statement does not show all of the itemized details that the IRS requires. The IRS clearly states that your income and expense proof must be clear, accurate, and include all necessary information. The IRS accepts receipts, canceled checks, and copies of bills, just to name a few, to verify your expenses. Also, you want to match the source documents with the transactions on your bank and credit card statements, as well as in your accounting system. And make sure that your source document has the date, time, amount, and location visible. So here's what I recommend. I recommend that you scan or photocopy your receipts and source documents. When you keep your records organized This will save you time when you file your taxes. Mistake number 2, misreporting income. The income for your firm can be received in many forms. Now, of course, you have the income that you're earning from providing your services and products to your clients. Income is not the money that you invest into the firm as the firm owner. Please understand that the IRS has a system that compares the income you report on your tax return with the various 1099 forms that they receive. To avoid penalties and interest and even a possible audit, you want to make sure that you report all of your income. You do not want to misrepresent any of your income. I cannot stress that enough. Mistake number 3, taking the full 100% meal deduction. Under the Trump tax plan, entertaining a client is no longer deductible. For a meal to be deductible, there are certain criteria that you must abide by. You must have a scheduled meeting before and after that particular meal deduction. And most of the conversation must be about business, and your meal companion must be an actual potential clients, or partner. Also, to write off your meal expenses, the receipts will need to show the restaurant's name, the location, the date, the time, who attended the meeting, the total amount paid, and a brief note explaining the conversation, the discussion during the meal. Now, I recommend that you either use your accounting system and write notes when you enter those transactions into your system, or have a special journal that you keep for your business each year. And when you have certain deductions, jot down additional information, including a copy of the receipt for that deduction, especially your meals. As a matter of fact, you may even want to have just a meal deductions journal, depending on what type of business you're in. Mistake number 4, filing your taxes late. Now, as I mentioned before, tax time is incredibly stressful when you are attempting to gather 12 months worth of documents, receipts, and updating your accounting system. If you cannot file your taxes on time for any reason, I want to stress that you need to file an extension. Listen, do not procrastinate with filing an extension or filing your taxes, because this can cost you thousands of dollars in penalties and interest in the end. And why pay that when you don't have to? Mistake number 5, not keeping records long enough. Consultants often ask me, how long should I keep the receipts and source documents and tax return for my annual taxes? Now, many consulting firm owners disregard their receipts or source documents immediately or within about 1 to 2 years after they file their tax return. According to the IRS, you must keep the records that support your income or any credits shown on your tax return until the period of limitations for the tax return has ran out. Now, usually the period of limitations is the time in which you can amend your tax return to claim a refund or a credit, or the time in which the IRS can assess additional taxes. A great rule of thumb is to keep all documents for at least 3 years. On my website for this episode, I have included additional information directly from the IRS, and it details specific cases in which you want to keep your tax return, receipts, and all source documents for 6 or 7 years. So make sure that you read that, because again, in certain cases, you need to keep this information for 6 or 7 years. Now, to further help consultants prevent costly tax mistakes. That is the reason why we created the one-time tax-ready bookkeeping cleanup special for the month of December only. As I mentioned earlier, the special is only for 10 consulting firm owners who want to eliminate the tax filing stress, position their firm for profitability, become fiscally responsible, and be in compliance with the IRS for the upcoming tax season. For more information, click the link in the description, visit sytpnow.com/TRB. Thank you for listening and watching the Say Yes to Profits podcast. Until next time, say yes to profits. Toodles.